Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's banking sector continued to expand lending activity during the first quarter of 2026 despite growing external risk linked to Middle East tensions and Cyclone Ditwa. According to the latest credit supply survey released by the Central Bank of Sri Lanka, banks reported stronger willingness to lend across the retail, corporate, small and medium enterprise sectors compared to the previous quarter. However, lending appetite towards the state-owned enterprises declined during the period. Banks attributed the stronger lending environment to improved economic conditions, stable interest rates, favorable market sentiment, stronger corporate earnings, and better asset quality. The survey also indicated that demand for loans increased across all major sectors during the first quarter of 2026. In the retail sector, demand for housing loans, pawning facilities, and vehicle leasing recorded notable growth. Meanwhile, expansion projects, sector-specific credit schemes and new business ventures supported increased borrowings in the corporate and SME sectors. Loan demand from state-owned enterprises also turned positive, partly due to high financing requirements linked to rising fuel prices and development projects. The Central Bank of Sri Lanka stated that banks expect lending activity and loan demand to continue increasing during the second quarter of 2026, although at a slower pace. Banks also noted that ongoing geopolitical tensions and supply-side disruptions linked to the Middle East conflict continue to weigh on lending risk assessments. The survey further showed an improvement in banking sector asset quality, with non-performing loans declining across all sectors during the first quarter compared to the previous quarter. Banks credited the improvement to stronger recovery efforts, improved collection mechanisms, loan restructuring arrangements, healthier borrower cash flows, and broader macroeconomic stability. Meanwhile, loan application rejection rates declined across the corporate and state-owned enterprise sectors due to improved lending proposals and better economic conditions. However, rejection rate increased slightly in the retail and SME sectors amid concerns over repayment capacity, collateral quality, and the impact of unexpected natural disasters. Banks expect rejection rates to ease across all sectors during the second quarter, supported by stronger borrower cash flows and improved credit evaluation processes. The latest survey comes ahead of a closely watched monetary policy statement by the Central Bank of Sri Lanka as markets continue to monitor economic and external sector developments. Sri Lanka is intensifying efforts to attract foreign direct investment with the launch of a new digital investment platform by the Board of Investment of Sri Lanka. The platform, titled Ready to Invest, features more than $3 billion worth of investor-ready projects across 8 priority sectors. According to the Board of Investment of Sri Lanka, the initiative is aimed at improving investor access to structured opportunities while strengthening transparency and investment facilitation through digitalization. The platform includes more than 30 projects covering tourism, manufacturing, logistics, technology, renewable energy, agriculture, and urban development. Urban, residential, and mixed-use developments account for the largest share of the investment pipeline, with indicative opportunities valued at around $970 million. Manufacturing projects follow with an estimated value of $650 million, while tourism and leisure projects account for approximately $400 million. Transport and logistic opportunities are valued at around $385 million, while ICT, innovation and technology park developments account for another $280 million. Renewable energy and sustainable utility projects are estimated at $210 million, with agriculture and agro-processing projects valued at over $100 million. The platform also highlights several flagship projects including textile, manufacturing zones, pharmaceutical and active pharmaceutical ingredient manufacturing facilities, electric vehicle assembly operations, renewable energy ventures and logistic infrastructure developments. One proposed textile manufacturing zone in the eastern province is expected to strengthen backward integration with Sri Lanka's apparel industry and reduce dependence on imported textile imports. The platform also features a proposed $80 million active pharmaceutical ingredient manufacturing facility aimed at supporting pharmaceutical exports and regional supply chain diversification. According to the Board of Investment of Sri Lanka, the tourism sector projects are positioned to benefit from the country's recovery in tourist arrivals and its year-round destination appeal. The logistics and maritime sector projects are focused on Sri Lanka's strategic location along major Indian Ocean shipping routes. Within the technology sector, Sri Lanka is being promoted as a regional digital innovation and IT services hub supported by a skilled workforce and a growing startup ecosystem. The latest initiative comes as Sri Lanka continues efforts to rebuild investor confidence following the economic crisis and debt restructuring period while competing with the regional economies for export-oriented and technology-driven investments. The Board of Investment of Sri Lanka also stated that country's foreign direct investment inflows reached around $1.06 billion in 2025, while approximately $1.9 billion worth of approved projects are ready to commence operations. Sri Lanka's exports to the European Union recorded steady growth in April 2026, supported by improved performance across several key export sectors. According to the latest trade data, exports to the European Union, which account for 25.5% of Sri Lanka's total merchandise exports, increased by 4.97% in April 2026. During January to April period, exports to the European markets also rose by 4.62% compared to the corresponding period last year. Among the top European markets, export earnings to Italy increased by 8.27% to $222.74 million. France and Belgium also recorded growth during the period. However, exports to Germany declined by 5.19%, while exports to the Netherlands fell by 3.42%. Meanwhile, Sri Lanka's rubber and rubber-based products sector continued to perform strongly. Export earnings from the sector increased by 5.23% year-on-year to $64.35 million in April 2026. Industry and surgical gloves of rubber recorded a notable growth of 22.95%, contributing positively to the sector's overall performance. The food and beverages sector also showed significant expansion. Export earnings rose by 45.17% to $63.18 million. Processed food exports, which account for nearly half of the sector's export earnings, recorded a sharp increase of 145.81%, reflecting growing international demand for Sri Lanka's value-added food products. Electronic component exports also posted strong gains. Earnings from the sector increased by 41.51% to $43.50 million. Strong performances were recorded in insulated wires and cables, switches, boards and panels, and electrical transformers. Exports of spices and essential oils increased by 6.26% to $25.45 million, mainly supported by a 58.06% increase in cinnamon exports. Seafood exports also expanded by 13.07% to $30.19 million, driven largely by higher frozen fish exports. In addition, the diamonds, gems and jewelry sector estimated growth of 6.26% to $31.40 million. On the services front, ICT and BPM exports reached an estimated $146.09 million, while financial services exports recorded a sharp increase of 119.41% to $6.82 million. The latest figures indicated continued resilience in Sri Lanka's export sector, supported by growing demand for value-added manufacturing and services exports. Sri Lanka's coconut-based export sector is expected to become a major foreign exchange earner, with export revenue targets ranging between $1.5 and $2.5 billion. According to industry data, coconut-based exports recorded strong growth in April 2026, with export earnings increasing by 23.49% compared to the same period last year. All major subsectors within the industry showed positive performance during the month. Exports of coconut kernel products increased by 7.29%, while coconut fiber products rose by 27.24%. Coconut shell products also recorded a sharp increase of 66.67%, reflecting rising global demand and greater value addition. Among coconut kernel products, export earnings from coconut oil and liquid coconut milk also increased compared to April 2025. Within the coconut fiber category, cocoa peat, fiber pith and molded products generated $18.62 million in export earnings during April, recording an increase of more than 11%. Activated carbon, one of Sri Lanka's key value-added coconut shell export products, also showed strong growth. Export earnings from the product rose by over 58% to $20.55 million during the month. During the first quarter of 2026, export earnings from coconut and coconut-based products increased by 20.76% to $314.09 million. The report also noted a growing shift towards high-value and processed coconut products. Virgin coconut oil, coconut cream, and liquid coconut milk recorded strong export growth during the period. Meanwhile, the government has allocated more than 3 billion rupees for fertilizer subsidies, replanting programs, and disease management to support the industry. The Coconut Cultivation Board has also set a production target of 4.2 billion high-quality coconuts for the year to meet increasing global demand. Globally, the coconut oil market is projected to reach $11.05 billion by 2031, driven by rising demand for natural cooking oils and increased use of virgin coconut oil in cosmetics and personal care products. The report further highlighted that consumers worldwide are increasingly shifting towards the natural and minimally processed products, creating new opportunities for Sri Lanka's value-added coconut export sector. The Monetary Policy Board of the Central Bank of Sri Lanka has increased the overnight policy rate by 100 basis points to 8.75%. According to the central bank, the decision follows a review of both domestic and global economic conditions. The bank stated that rising tensions in the Middle East have driven up global commodity prices, particularly petroleum prices, placing pressure on economies worldwide, including Sri Lanka. Higher global oil prices have also pushed up domestic energy costs. As a result, inflation rose to 5.4% year-on-year in April 2026. The central bank noted that inflationary pressures are largely supply-driven. However, domestic demand has also strengthened. The bank pointed to continued credit expansion, high imports supported by credit growth, and improved economic activity as signs of strong demand conditions. According to the central bank, inflation is expected to remain above the 5% target in the near term before gradually easing. On the external sector, the bank said the current account surplus remained modest during the first quarter of 2026. This was mainly due to a widening trade deficit linked to higher fuel import costs and slower tourism earnings. Meanwhile, workers' remittances remained resilient during the year. Gross official reserves stood at $6.8 billion by the end of April 2026, despite ongoing foreign debt servicing commitments. The Sri Lanka rupee also faced depreciation pressures in recent weeks, in line with several regional currencies. However, market conditions have shown signs of improvement. The central bank also stated that expected multilateral inflows, easing geopolitical tensions, and recent policy measures introduced by the government and the central bank are expected to support external sector stability going forward. The Monetary Policy Board further observed that rising inflation risks, stronger private sector credit growth, pressure on the external sector, and the possibility of high inflation expectations made tighter monetary policy necessary at this stage. The central bank also reaffirmed its commitment to maintaining price stability while supporting medium-term economic growth. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 8.36%, up by 118 basis points. The 182-day T-bill rate stands at 8.68%, up by 143 basis points. And the 1-year T-bill rate stands at 8.83%, up by 134 basis points compared to the previous week. Thank you for watching. We'll be back next week.